What's up, everyone? We are live. Let me adjust my seat. Boom. Ready to rock and roll. So, today in this live, we're going to talk about franchise versus real estate. What is the better investment? We're going to break down some numbers. We're going to dive into some scenarios in terms of, hey, if you were to buy a property, kind of what does that look like? If you're to buy a franchise, what does that look like? And I think we'll make this one relatively quick today, unless we have a lot of questions. So, as we get started, folks that are tuning in, just drop me a note where you're tuning in from, what city and state. Would love to see it. If you're watching the replay, drop a comment. Let me know that you're watching the replay, and we'll just dive right in. If you have questions as we go along, just go ahead and drop your question. Boom. So franchise versus real estate. All right. So which investment's better? Which will perform the best, and what makes the most sense? Buying a franchise or investing in real estate? As you guys can imagine, the answer is not very straightforward, right? There's a bunch of pros and cons, and there's, I don't want to say complexity, but there's a bunch of pros and cons. There's things to factor, right? It's like comparing apples to oranges, which is, I'm not going to even say what I'm going to say, actually. Anyways, as you folks are tuning in, let me know what city and state you're tuning in from. And I'm curious, what do you think? Drop a comment. What do you think's the better investment? But personally, like, which one do you think just overall has the best financial opportunity? Franchise or real estate? So here's the challenging thing right now, that housing prices have soared over it's really the last 4 years now. Welcome, DP from Connecticut. Dizani says franchising. Kayla from Florida. Hello, hello. It's hot here today. I don't know where you're at, Kayla. I'm in Orlando, and I went for a walk a couple times today. It's a good 97 degrees and sunny and very humid. Tough. But look, at the end of the day, especially if you're in Florida, prices, especially here, have gone up because a lot of people, ever since COVID happened, a lot of people wanted to move to Florida. So, you know, during look, during the good times in an investment, it's easy, right? I mean, if you had bought a house 2019, 2020, you would have tripped over $100,000, in appreciation, just because that's where the market went. That's where everything went. But right now, it's tough, right? Because real estate prices are through the roof. I mean, do you guys see the prices of homes? They are absurdly expensive. And then interest rates are so high. So you take those two things, how do you buy a property and potentially cash flow from it, if that's what you're looking to do? Or how do you buy something now as an investment? Do we expect it's going to keep going higher from here? I mean, do you guys think that real estate's going to continue to go up, or I'm curious, do you think we're going to have a correction in real estate first, or you think it's going to go up more? I don't know how a lot of individuals are affording homes. I mean, the average home price in the US, I think, went up to like 450 from, I think it was in the high twos or low threes. I'd have to look up the stat. So then it leaves us in a bit of a bind, right? Where we go, well, how do we produce cash flow? And so I thought, this would be interesting. I made a video a couple of years ago about breaking it down. So I figured, let's break down some numbers and figure out what investment makes the most sense. So I guess I put that in twice. So there's really four things to consider overall, because even if you can make the same amount of money for an investment, you've got to think, well, how much did it cost? Right? What were the actual startup costs? If, let's say, you said, okay, hey, you can make $100,000 in return, and one you have to put up $1 million, and one you only have to put up 250, in theory, right? It's like, okay, well, the $100,000 return doesn't sound as great on the million. So we got to factor in the startup costs. That's important. And how do you finance it? We want to factor in, of course, cash flow, because that's one way to measure an investment, or what are the dividends or cash flow that it's producing overall. What's the lifestyle impact? That's an interesting question, right? How does buying real estate as an investment impact your lifestyle as opposed to buying a franchise or business? That's a big consideration because even if you made the same amount of money, one probably requires more effort than the others. Number 4, I'm going to surprise you. I think it's interesting. It wasn't something that I thought about from the beginning, and so I think it's something that we have to start about with the end in mind. So, let's do it. All right, we're going to dive in deeper to this. Cool. By the way, I'm going to put this little banner down here for our Franchise Buyers Academy. It's pretty epic. We're going to actually dive into a couple of franchises and their profit margins later on. And it's just like what's in here is like 2 slides from the Franchise Buyers Academy where we dive into profit margins of a bunch of different franchises. So you can check it out at franchiseempire.com/FBA. If you haven't seen it, you're going to want to see it. It's like pretty epic. I'm going to drop the link there real quick. Let's rock. Okay, and Kayla thinks real estate's going to go up more first. Up more first. And what's up? Rainbow Art from Connecticut. All right, cool. So let's dive into this part. So in terms of startup cost, it looks like I did that wrong in the Google slide. In terms of startup cost. So let's say you had 50 grand to invest. I just want to run an easy scenario for you. Let's say you got $50,000 to invest, whether that's in a savings account, whether that's in an old retirement account, because you can if you have money in a previous retirement account, you can either use it to invest in a business through something called ROBS, rollover for business startups, or you could use it to invest in real estate by moving it to a self-directed IRA. Most people don't even know that. You can take a old 401k or an IRA that you have, you can take it out of the stock market. You can put in something called a self-directed IRA, and then you can invest directly into real estate through your IRA. Like you could write a check for it. Most people don't know that you can do that. So let's say you have 50 grand. So if you're going to buy a house, right? If you're going to buy a house as an investment, you have to put 20% down, pretty much. I know there's all these people out there that say you can buy real estate with no money down. Like, let's not play around with all these complicated scenarios and this. Like, pretty simple. The average person, if you're going to go buy an investment property and you go get a mortgage, they're going to say you need 20% down. Okay. So you would be able to buy a house for 250. I don't know where you could buy a house for 250 right now, but you could buy a house for 250. Or let's say the franchise startup costs are 250 total. You would still, for an SBA loan, most SBA loans, you can get away with putting 20% down, right? That's typically, if you have 20% down, you can get an SBA loan. As long as, obviously, you got to have good credit, all that stuff. The catch, though, with the franchise is you're going to need a net worth of at least 150, bare minimum. I mean, ideally, like you're higher than that, but bare minimum, you're going to need 150K net worth. On the house, you still have to get approved for the mortgage, and you got to show that you can qualify because you probably have a mortgage now, right? So those are the startup costs. Is that pretty clear? Any questions about startup costs? We're going to use just the same example here. You got 50 grand. You got 50 grand somewhere, right? Or access to 50 grand. And so either you could go the direction of a house and get a mortgage, put 20% down, or you get SBA loan, put 20% down. Pretty clear so far, right? Overall, in terms of startup cost, I feel like I would rate them equal, but with franchising being just maybe a little bit more difficult because of the net worth requirements on it. But either way, like getting a mortgage for an investment property is also not easy. So let's talk about cash flow, right? This is probably one of the most important parts of the whole thing that everyone wants to know, right? So, like, what actually produces income? So let's say you buy the house for $250,000, right? Again, assuming you can find a house for $250,000. If you can't, maybe from startup costs, maybe 100 grand to invest is maybe a more realistic number. Maybe we should have threw that scenario around actually, because then you'd be able to buy a house for 500. There's going to be a lot more options out there, but I don't even know where you could buy a house for 250. So you buy a house for 250 grand, and let's say you can get about 1% of the value as an annual rent cost, right? So when you do 2250 times 12, 2250 a month, that's 27,000. So that's actually a little bit, I don't know. It was a while ago since I did this math, but somehow I came with that number. But let's because I think that would be 1% would be 2,500, not 2,250. So I don't know how I came up with 2,250, but around 1% is a realistic kind of rent ratio overall, right? So let's say your payment is 1,500. Well, that's gonna be hard to. This whole scenario is actually, I did this 2 years ago. This whole scenario is gonna be more expensive, right? If we just pulled up a mortgage calculator real quick, like let me let's see what we got going on for a second. Mortgage. I know you can't see my screen. I got three of these bad boys. Um, Mortgage calculator. Let's see, home price 250, 20% down, 30 years. The interest rate's 700. It still puts it at about $1,500 a month, which is interesting. Okay, we'll run with it. So let's say you spend 1150 for principal and interest, 200 for property taxes, 150 for insurance. That leaves you with $750 a month in cash flow, right? I'm just curious how many of you would put down right now in this scenario if you could put down 50 grand and buy a house for 250. This scenario, cash flow 750 a month, would you do it? Like if that was the only, like you could only put that 50 grand in one place, would you do it? Now, I'm back. I hit the wrong button on my mouse. Sorry about that, guys. Um so I'm curious what happens when what did you guys see when that happened? Did it just go blank? Anyways. All right, so we got two no's, two yeses. Okay. Now what I was trying to do was go, okay, something to consider, right? Is management, right? So most of the time when I own my rental at a property management company, normally they're gonna take what, 10, 12% rent, right? So they're gonna take 225 a month to manage the property. Either that or you're dealing with everything, right? So, anyways, that's that scenario. Okay, good to know. Good to know what happens there. My mouse has all these extra buttons, and I guess it actually hits the back button on the screen. So that's real estate. Interesting. Okay. Now, let's talk about some franchises. Let's throw out some numbers. Again, these are just a couple of snippets and screenshots from the Franchise Buyers Academy, where we go deep into sales of different franchises, profit margins, sales to investment ratios, literally like the exact blueprint on how to make money. There's nothing like it that exists on the interwebs. So this is actually Papa John's. Right? So, and this is just an example because when you think of franchise, most people think of food, right? But the reality is, and if you listen to any of my stuff before, it's like food is oftentimes a pain in the butt, takes a lot of money, a lot of startup capital. But I just want to give you an idea of like the low margins in food overall, right? So Papa John's, they're corporate locations, and you got your franchise locations. Corporate locations average about $200,000 more a year in sales, which is pretty significant, right? I wonder why that is too. Like I have a few ideas of the reason why that could be. Why do you guys think that is? Why do you think that the corporate locations make more than the franchise locations. Because a lot of the times, part of the argument with the franchise is you have more engaged people running the franchise location. So in theory, they should perform better. So curious about that. But their restaurant profit, EBITDA is earnings before interest, taxes, depreciation, and amortization, right? So they're essentially, let's just call it profit for the sake of using an easy term, 11%, right? 11% profit margin's not a lot. It's going to take you a lot more than so 11%, let's just call it 10, you're $113,000 in average profit, right? That's not a lot because these bad boys are not cheap to get open. But then when you factor in the royalty, you got 6% profit margin. So you're talking now you're at 50 grand. Now, the startup cost for Papa John's, I thought I had this in front of me. That is a giant range. It ranges from 200 to 750. So let's just call it 500. So you'd really have to put 100 grand down for this, and then you're talking about 50 grand profit, and that's before debt service. So would you do that? I mean, that doesn't sound like a great deal to me. Doesn't really sound like a great deal, right? So, and this is part of the reasons why I tell people stay away from food. Food has lower profit margins. Very, very high barrier to entry in terms of startup cost. And then the returns not super great. Rent costs are pretty high too. So, but this is where there's some other opportunities that may look attractive. So, this is a home service franchise. So, meaning that they do work in home services overall. Think, potentially painting or plumbing or landscaping or something home service. Think gutters, fencing, random things, right? What people are calling boring businesses. So now let's take a look at a couple scenarios here. For this specific franchise, the startup cost, it doesn't say it, but these are the startup cost range listed in their FDD between $143,000 to $200,000, right? 143 grand to $205,000. So if we're going to put 20% down on that, what the max in that scenario is 40 grand. So let's call it 50 grand, right? So if we go back to this scenario here, the house, right? We're still putting down 50 grand. The house is going to generate us $750 a month in cash flow. This one says the average sales, 1 million, adjusted profit 257. Median sales, meaning smack dab in the middle, 883, adjusted profit of 175. Debt service on this bad boy. So for an SBA loan, let's say you put 50 grand down. So let's say the SBA loan winds up being for 150. SBA loan rates are high right now, 11%, right? Somewhere around that. Still, your payment's 2 grand a month, right? Your payment is 2 grand a month. So it's 24 grand a year. And it showed the median profit. Let's even go with the median number because that's smaller. Oh, you guys can't see my calculator, can you? Stop screen share. Let's do this so you can see how, as I'm doing the numbers. Entire screen. Here we go. Right? So median, we're going to go more conservative. Median, 175 minus 25 for the debt service. You're talking about 150. Right? So obviously that, like, hey, what do you think about that? That's a pretty attractive scenario. But let's be fair. Let's play devil's advocate. Someone's losing money. Someone's losing money here, right? Someone lost 57 grand on $268,000 in sales. But what's interesting to me is when I look at a franchise, and I would want to know for this franchise, if I were you, what I would want to know is how many franchisees are there, right? Because we got a low, we got a high, we got someone doing as high as $3.8 million in sales with $1 million in adjusted profit. Interesting. but the average and median numbers look pretty interesting too. So I want to know how many franchisees, are in this franchise, overall, right? By the way, our team has a whole list of these sort of franchises. Here, two different directions you can go. All right, so here's what I'll lead you to. Let's see. Let's drop that. For those of you who want to cut right to the chase and you're like, I would love to know what sort of attractive franchise opportunities are available in my area, because overall I'm pretty serious about it. I'm financially qualified. Then you can go to franchiseempire.com/check territory. And our team can look at our list of some of the franchises that we've compiled that have like solid sales numbers. And we can check to see what's available in your area that may or may not, that may match with your skill sets. Right. I'll drop that link there as well. franchiseempire.com/check territory. For those of you who just want to like kind of peruse, if you're just like, I know I'm not ready for that yet, or maybe you're not financially qualified, then what you can do is you can go to franchiseempire.com/low cost, and we'll send you a 17-page PDF breakdown of 5 low cost franchises that all make $1 million or more. We pulled up the numbers, we pulled up their FDDs. Comes with a companion video, but a 17-page PDF breakdown of those businesses. I'll drop that link too. Boom. Okay, so like that's interesting. Like how many of you look at an opportunity like this and you go, that's pretty attractive, between 150 to 200 grand in startup cost, median sales. Like, here's the question: would you take the risk? I mean, obviously you don't know enough information, you haven't vetted it. Would you take the risk in this scenario, given what you know, knowing that someone's losing 57 grand, the person in the middle is making 175, the average 257, and the highest performer is $1 million? Would you roll that dice with the 50 grand with just the limited information that you have now? Curious, yes or no? Let's give another example. Let's take that banner off for a second. Let's give another example. Oh, here we go. We could do that. So this is another home services franchise, right? And so do we have the startup costs on this one? Oh, okay, we don't. I don't remember exactly. Let's just estimate that this one is about 250K in startup costs, because if my mind is remembering correctly, I'm pretty sure it's around. I actually think it's lower. It's around 200 grand. But here's an interesting one. These show 2020 sales, 2021, 2022, right? And this was one specific location. This franchise in there. So if you guys aren't familiar with franchises, they all have to have what's called an FDD, a franchise disclosure document. So they can't just tell you, hey, Mike, you could make X number of dollars in this business. They can't say it unless someone else has already made that amount of money in the business, number one. And number two, they can only say it if it's in their franchise disclosure document, or else they cannot tell you hypothetically how much money you can make, because they're regulated by the FTC, and it's what's called a financial representation. So where was I going with all that? Well, so what's interesting is, this specific franchise, they actually list, I believe, like 60 or 80 of their locations individually. So I believe this is just one single unit location. It's not technical location, it's territory, because it's a service-based franchise. And so they show that, okay, in 2020, $813,000 in gross sales. 2021, $1 million in gross sales. And then 2022, $1.1 million in gross sales. What's cool is they really break this down. I mean, they give you a breakdown of labor cost of goods, right? So they're showing you what your gross profit margin is. That's something that's a little bit deceptive when franchises will list on their website. They're like, there's 60% gross profit margins, and then someone doesn't know what the term gross profit margin means, and they think that they could make 60% in terms of a margin overall. It's sad. That's actually one of the things we define in the Franchise Buyers Academy, by the way. We go through a whole list of terms that you need to know of business terms. So I'll swap it back. Um, and let's see, what in terms of comments. All right. Kirby said no. Mike said yes. Kayla said yes. Okay. Yeah, I mean, I feel like I would be in the same scenario there. Like just that sort of information. If I was just rolling the dice, okay, yeah, I'd take that bet. Like from a number standpoint, pretty solid overall, right? And so these gross profit margins are nice here, and then it's showing adjusted profit each year is pretty much over 30%, with the exception of 2022 is at 29.1%. Looks like they had a lower gross profit percentage. They spent a lot more in labor, which is interesting. So you look at something like this and go, if I don't, yeah, can you see my cursor? I wish I had the ability to highlight through this streaming platform. That would make it so much easier and convenient. Here's how I dissect this because we're going into lifestyle now, right? Which is, and I'm going to go back. I'm going to go back for a second. Okay. I'm going to go back to those numbers because there's a point I want to make here is that the third thing that you have to consider when buying a franchise or real estate is what's the time investment that I'm having to put in and how does it impact my lifestyle based on the return that I'm getting, right? So if you said, hey, you could make $750 a month completely passively. Let's assume 750 a month passively. Let's say that includes property manager. You pretty much don't have to do pretty much anything. It's handled. Occasionally you get a call. Other than that, you file your taxes, you're good to go, right? But let's say for a franchise, let's say maybe you made 2 grand a month. Before that 2 grand a month, you had to put a lot more effort in. Let's say you had to work 10, 7, 15 hours a week, 10, 20 hours a week. Would you do it if it impacted your lifestyle like that? Right? That's an interesting question, right? So having owned a rental property myself, I definitely did not put in 7, 14 hours a month, and I should not have sold that rental property. I should have kept it. Um, this was a different example, so ignore that 2K for a second. But let's go back to this. Why do you think that the cost went up so much more? I mean, they only did $60,000 more revenue in 2022. Well, couple things. 2021, what did we face? A labor crisis, right? So maybe they just were extremely short-staffed here, right? I would imagine so because direct labor. I would imagine this owner was probably full-time in this business. Probably full-time in this business. Because to have 13% labor rate is pretty dang low. So maybe in here, maybe they hired a manager now where they get to work less, or maybe they're just getting caught up with their staff. Either way, 30% margins are insane. In this business, adjusted profit, 300 grand each year. This business is less than 250 to get open, right? So similar scenario there, you're talking like even on the lowest year, 320, and then subtract out the loan payments of 25,000 because about 2 grand a month. That's 295. So would you do it in this scenario without knowing anything else about the business? Would you do it? And for how many hours a week? Like, would you just go full time into that? Or would you try to hire a manager? Right? In theory, you go, okay, even if even if the owner was running that and it's able to produce 300, could I hire a full-time person, pay him 75 grand a year, give them a 10% profit share? Maybe I pay him 100 grand a year, but I walk away with 200. That's an interesting scenario, right? I'm oversimplifying, by the way, right? I'm a strong believer. I don't like the idea of talking about franchises in terms of passive income. Because unless you are very experienced hiring leaders and managers and know how to lead and manage them and so on and so forth, something passive could turn into not passive very quickly. Um, But what do you guys think about this opportunity? Any thoughts? I think it's pretty interesting. The crazy part is there are a lot of different franchises like that. If you want to see more and more like profit breakdowns like this of different franchises and in different industries, like one of the things in our franchise buyers academy, we break down retail versus service. So we show what it would be like to open up a whether it's a gym or a wellness place or a fast food chain or whatever it is. We compare the startup costs, literally break down the numbers, do all the calculations in terms of what the debt service would be, the margins, all that good stuff, and then how to scale it into multiple locations and what that looks like. It's super fascinating. So you should check that out. franchiseempire.com/FBA. But I'll get to the questions in a second. Again, we just have to consider lifestyle. So, I ran like our first store pretty much the first year I worked all the time. And then we moved to Florida from California. And after that, I pretty much put maybe 2 to 5 hours a week in that business. Granted, like it wasn't, I mean, we weren't trying to make a ton of money with that business. But I was pretty much mostly passive, but it made me really nervous because at any time I was fully relying on my manager. If my manager left, boom, I would have been screwed, right? Because he ran the store. So you have to consider if you're like real estate, franchise, how does that impact your lifestyle? Let me be clear. If you are looking to work less in the short term, if in the short term you're like in the next 2 years, I want to work less, don't buy a franchise because you will work more in the short term. But if you can put in about 3 good years of hard work and then have like a strong team in place, woo, there could be some exciting potential there, right? Number 4, I told you it'd surprise you. It's exiting, selling, right? So, how does it work with real estate? How do you sell? How do you get out when you're done? Well, overall, real estate's pretty easy to sell. Would you agree with that? Like, pretty simple. You find a real estate agent, you list it, like the value of a property overall, fairly simple to dial in. People may negotiate, etc. Pretty easy to sell. You'd have to pay a 5% commission to the realtor, right? So if your house became worth your $250,000 house became worth 500,000, you would need to pay what's about a $25,000 commission to the realtor, right? Values based on the market. Pretty simple valuation. What about franchises? When you go to sell, how does that work? Well, it takes a longer time to sell. Businesses, generally speaking, take longer to sell, right? Then it's much more complex to sell a business. Excuse me. So that's one of the things about businesses. Takes a little bit longer to sell. If you hire a business broker, generally their fee is going to be 10%. Now, when I sold my businesses, I represented myself as a broker. Maybe I made a mistake. Maybe I could have got more. I don't know. It's done. But I decided that I was going to list them on my own and handle the process selling. It took a long time and it was really complicated. I learned and fumbled my way through it. I don't know that I would really recommend it for anyone, but it wound up working out great because now I know so much about resales, buying businesses. Because when we bought our resale location, I also represent ourselves. I didn't have like a buyer's agent or anything. So I had to learn. I had to learn escrow, bulk sale transfers, and UCC liens and all those fun things. But typically you would pay 10% to a business broker for selling your business. Now, the value of the business, right? So when you're thinking about it from like, okay, which investment is better? The value of the business is based on profits, right? So typically a small business is going to sell for 2 to 4 times its profits. What do I mean by that? Well, if your business, as an example, is generating $50,000 in profits, it's going to sell for between 2 times that, so 100 grand to 200 grand, right? If we're doing 100 grand in profit, it's going to sell between 200 grand and 400 grand overall. Now you may go, Well, what determines if it sells for 2 times profits or 4 times profits? What impacts that? That's a great question. Number 1, the more you are involved in the day-to-day and the business is reliant on you day-to-day, where you're, like, in the day-to-day of the business, the lower the valuation of the business is. So, probably closer to the 2x, maybe even sometimes, like, 1x. The more you have people in place, managers, right? Let's say instead of you being the key salesperson in your business, you have a full-time salesperson, right? Your business becomes more valuable. If you have a store manager, a site manager, a general manager, operations, whatever it is, assuming you have layers of management, right? Then it makes the business more valuable. And depending upon how big you grow, just through sheer size and locations, it can make it bigger and bigger. I have a buddy that had he owns like 7 territories of a franchise. He got it valued, and because they have like a general manager, multiple sales manager, operations managers, I mean, they have like a legit structure, like 50, 60 employees. Um, they got it valued and he got a valuation of 9x. So in that situation, if his business is making $1 million a year, he could in theory sell it for 9 if it's worth 9x. Pretty crazy, right? So the big bang for your buck in selling a franchise potentially is getting big and growing big. And that's where the real money is. I mean, yeah, you could find a franchise too. I mean, there are franchises as an example on the on whoop, let's see. So on this thing, if you go here, the 5 low cost franchises, you get it at franchiseempire.com/low cost. Um, that's that. Like there are franchises in here where people own one territory. It's less than $200,000 to get open, and the average sales are 900 grand. Or someone owns 2 territories, and meaning they own 2 different territories because it's service based. So like an area of zip codes. And the average owner does $1.4 million in sales in that instance. That's straight from their disclosure document. The business is less than 200 grand to get open. But generally speaking, I mean, if you want to have a $5-10 million a year sales business, you're probably going to need to own like 4 or 5 territories, et cetera. We recently, so we have a newsletter that we do actually. Every week we send out a we send out some franchises. We tell you the names. We break down how much they're making, startup costs, all that cool stuff. You can go to franchiseempire.com/newsletter if you want to sign up for that for free. And we share different businesses and and kind of what they're making, blah 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 blah. There was a franchise where the top owner is doing $24 million a year in sales, 24 million in a senior care business, which is pretty wild. So I would imagine in a business like that, as an example, I would say if you're doing $5 to $10 million in sales or above, and you have 3, 4, or 5 territories, and you have layers of management, that's when the valuation can start to get pretty attractive. And that's where you could potentially have private equity companies that even want to come and buy you out outside of just a regular individual. Sometimes the franchisor wants to buy you out. That's when things can get really, really exciting. And so that's where, when you think about investing in real estate versus franchise, you have more control over the potential exit value of a franchise than you do real estate. Like you can control in real estate where you potentially buy and that it's a growing area, but you can't control the real estate market. But 2 people could buy the same house right next to each other, and it doesn't matter how much smarter the other person is or how much hardworking the other one is. Generally, they're going to just stay around the same value if apples to apples comparison. But if 2 people buy a business and have the same business that's across the street, like one person can become a way better entrepreneur than the other one and make a lot more money and potentially put this other person out of business. That's to me the cool part about owning a business, whether you own a franchise or whatever, is that you can build something of value that can then be sold. Right? That's the really cool part. when I sold to my locations, people are actually more excited to buy them and more willing to buy them because it was a franchise too. They're like, "Oh, I'd rather buy something that like had a system, has the brand, or like, the franchisor is going to train me." There's some attractive elements to that. So that was all I had. Let's see what questions we have, and if you guys have any more questions, let me know. Do. Let's see. Uh, hey Tark, I was wanting your opinion. I was speaking to my uncle who's a financial advisor and my aunt who is an accountant. They both told me the the issues with franchise is that they take a large chunk of the pay. They take a large chunk of the pay, and if you make more money and your store is doing well, then they just take a percentage. It's an interesting point. Let's look at this just like factually, right? So the way here's a way to think about it. Okay, great. Some people go, I've had someone say that before. I thought about owning. I remember I was at like a party, a gathering for our son. And there were parents and whatever, and people ask, "What do you do?" Whatever. People know I'm in the franchise space. And they're like, one guy said to me, "Yeah, I thought about opening a franchise, um, but I just didn't like the fact that they were going to take like 7% and like take some of my sales. I'd rather do it on my own." I was like, "Okay, that's fair." And I was like, "So what do you do now?" Can you guess what he said? I just want to pause for a second. Can you guess what he said when I asked him, "What do you do now?" I know there's a delay in the live. He said, "I work for a government contractor." Not that there's anything wrong with working for a government contractor, right? There's nothing wrong with providing for your family in any way. But he didn't own a business. So the business he said he could do it on his own, he didn't. He didn't. So, like, in my opinion, is it a straight answer? No, because it's like, okay, in theory, if you go, well, if I opened a franchise and I did $1 million in sales and I had to pay 7% to the franchisor, that's $70,000 a year. It's a fair point. But like, what's the cost of not doing it? What happens if you don't do a franchise and you try to start the business on your own and you have no clue what you're doing? You think you do. You realize it's harder than you thought. There's more things that you need to figure out. You have no support system around you. So the highest year, what you make is 100 grand in sales. What's more expensive? Paying the $70,000 in royalties on $1 million in sales, or not ever getting the business past 100 grand? Is that the scenario that always plays out? Probably not. But what I find is that, you know, oftentimes people will talk people out of doing something and then the person just does nothing. So for me, franchising was the perfect stepping stone. My dream was not to be a franchise owner. My dream was to do what I'm doing now. Always wanted to be a YouTuber. I wanted to have an online business. I wanted to be able to inspire people. I wanted to be able to talk about business. And so for me, franchising was a stepping stone, right? And the question that I want you to ask, more importantly, when thinking about royalties, is what do I get out of it? If I'm going to pay 6 or 7% of my sales, what benefit do I get? That's the most important thing. See, and it's typical. Really linear people like financial advisors and accountants. I was a financial advisor for a while. I had my investment licenses for 15 years, by the way. They think very linear. You know, when you talk to someone and they're so black and white about things, you're like, dude, you're totally missing the bigger picture. And it's so obvious to you that they're missing the bigger picture, but they just think they think in a box. financial people tend to think in a box, right? So they don't see the bigger picture of, of it all. So, you know, someone ever comes in and they go, "Well, how much does it cost?" Before understanding what the value is you get out of it, that's not a conversation I'm interested in having. Someone's leading with, "How much does it cost?" I I know that person is they're not gonna be a great client or customer. Why? Because what here's what I've learned surrounding myself with really successful people, and as I've gotten more successful myself as an entrepreneur. The most successful entrepreneurs think first, what's the value? What will I get out of it? And is that worth the cost? And what's the return on investment on the cost? So instead of seeing things as a cost, they see it as an investment. So you might have someone that goes, okay, well, I pay real estate, I pay royalties, but oh, I get a system, I get a brand, I get access to other franchisees and owners and da 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 da, da, right? So at the end of the day, if someone doesn't like the idea of paying royalties, then don't buy a franchise. But don't not buy it just because someone else told you that the idea of paying royalties is bad. Because then guess what happens? You wind up doing nothing. You don't start any business. 0% of zero is zero. You see where I'm going with this? Hopefully that made sense. It makes so much sense to me in kind of what I'm saying. And to the point, she goes, "Well, Alex Hermosi says something similar." Alex Hermosi is a wired entrepreneur. He can be successful in almost any business, right? Most of the people who are starting a franchise either they just don't have the time, will, or skill to come up with something completely from scratch on your own. So if you feel like that's the route you want to go for it. Yeah, you don't pay anyone anything. Will you make it? I don't know. You're starting something complete. You have to figure literally everything out. Just for this business, like this, like as an example, this. Whoop, wrong thing. You see that logo in the left-hand corner where it says Franchise Empire up top? It might show in the right-hand corner for you. Do you know how much time invested went into coming up with this logo? Probably a couple of dozen hours. Couple dozen hours. We went through 3 logo changes in this business. I've probably spent a total amount of hours of 30, 35 hours over the last few years just on logos. Think about how much of a massive waste of time that is in terms of it doesn't creating a logo doesn't make you money in and of itself. That's not a revenue producing activity. So when you're starting your own business from scratch, just trying to come up with the concept, figuring out what the market wants, how to price things, how to structure it is freaking complicated. That's why the 9 businesses I had all failed because I kept getting stuck and trying to figure out stupid shit like put together a logo. So people like Alex Hermosi, that like he's gonna be able to win no matter what. I have buddies of mine that would never do franchises because they're bred entrepreneurs. They don't need to. There's no point for them to do a franchise. But if the idea of you trying to figure out something on your own, you're like, oh, that seems exhausting, or you've tried before to start up things on your own and it hasn't worked a bunch of times, then maybe you should get your first win under your belt with a franchise, right? Maybe. I don't know. Maybe not. And then, and then do this, then sell it. That's what I did. Like it was a great plan for me. So I personally don't think people need to own franchises forever. It's actually something that I talk about in our Franchise Buyers Academy. I talk about using franchising as a stepping stone. to whatever it is you want to do next. We talked to a lot of people where they're like, my dream is to eventually do this. Cool. Have you ever built a successful business before? No. Do you feel confident that you can? No. Okay, cool. Great. So go find a proven franchise, become successful at it, learn how to be an entrepreneur, build it up to be successful. Then either, put a strong manager in place, give them a percent equity or ownership or profit share and keep it, or sell it and then go do what it is that you really wanted to do. That's what I did. Boom, boom. Let's see. Any other questions? The government takes a large chunk of my paycheck. I'm glad to pay 6 to 8% all day. Andre. Yes, sir. Let's see. It seems weird to me that the franchise owners I would would want their franchisees making enough money to stop working. I do think that franchises are a lot better than opening your own small business. And for me, it's not even a matter of like a better overall. Obviously, I have a slight bias towards franchising, maybe a big bias towards franchising. But I actually think franchising is not the right fit for many, many people. And I'm like, if I had a conversation with you and you seem like someone who would not follow the system at all and want to do it your own way, I'd be like, dude, do not do a franchise. You're going to create a lot of stress for yourself. So for the right person, franchises are a great fit. For me, what I had to learn was I'm actually more of a born entrepreneur than I thought. I just sucked at it before. Because the whole time I was in my franchise system, I was like, we should do it this way. We should do it this way. We should do it this way. It's like the worst thing in a franchise is when, people come in to the proven system and like, hey, do it all these other ways. Now, granted, franchisees do have a but I'm still worried about getting scammed like you're talking about in your dark side of 7-Eleven video. Um, oops. Yeah, that's a natural fear. And it looks like my internet is a little bit slow right now. So hopefully it doesn't impact performance too much. But I'll close on this, which is here's the great thing about franchising: you get to talk to other franchisees. If you're really afraid of getting scammed, um, then you just do extra due diligence. You get to talk to and call a bunch of franchisees before you ever pull the trigger on a franchise. And if that's a real fear for you, then only look at franchises that have a lot of franchisees that you can talk to. Imagine being able to talk to 5, 10, 15, 20 people that operate that business. Hey, how's support from the franchise? Hey, is it worth paying your royalties? Hey, would you do this again? If you had to start all over again, would you do it again? Imagine being able to have a bunch of those conversations. You're able to hedge your risk. So that's my thought process overall. We wound up going off the deep end here. I didn't mean to go that deep into it, but hopefully you guys got value out of it. I would highly, 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 highly recommend. We've had hundreds of people go through our Franchise Buyers Academy now, and the response is overwhelming. So for those of you guys who like you want more meat and potatoes around how this all works, if you enjoy this style of video and kind of training and how deep we go into some of the nuances and really throwing out specific numbers, playing out scenarios, that's what more than half of the Franchise Buyers Academy is just pulling up numbers of franchises, talking through scenarios, how it would work if you had a manager, how it would work if you didn't, how that would affect your profit margins. And we just play around with all sorts of different scenarios that are really cool. So I'd highly recommend you grab the Franchise Buyers Academy. It's super epic, really. Last question. Janice said, how supportive was the franchise that I had? My franchisor was very supportive. Yeah, that was one of the great things with them. They were very supportive. Here's the thing, though. What you'll learn is that the franchisor, their job is to give you the system, not to teach you how to be an entrepreneur. Like, so the analogy is you buy a piece of furniture from IKEA. IKEA isn't it like the tool. It's like, okay, tools are included, the wrench is included, the nail screws, instructions. But then IKEA is not going to teach you how to go through the instructions. Hey, I don't know what this term means. What is that? Hey, I don't know exactly how to use this tool. How do I do it? Or, hey, I don't know how to. That's not what they're going to do, right? So, like, you still have to learn how to be an entrepreneur and develop that characteristic. But what I found was this squeaky wheel gets the oil, and it's like anything in life. So there's some franchisees, even that like we have that are still in our system that we coach, and they'll come and ask a question. Hey, I'm struggling with this challenge. And I'm like, what did the franchisor say? They're like, I haven't asked the franchisor. I'm like, why? I'm not in your franchise system. The first place you should always go when you have a challenge is the franchisor and other franchisees and hear what they say first and then get other insight, right? So I was constantly asking for help from the franchisor and leveraging their resources, so they gave me the support. But there were franchisees in the system that didn't. Um, do I mentor personally? Only if you have an existing business. And the word mentor is so weird to I always never know what people mean by mentor. Um, like I feel like when people say mentor, they're asking for free advice. Um, I do coach entrepreneurs, coach, consult. I think consult is the better way to but I personally only work with people that have a business because I enjoy working with the actual business owners, not people who go, I might want to do it, but you know what? Actually, I'm going to get a job instead. No, I want to work with committed, super serious people that follow the directions, that are decisive, that are coachable. That's me because I'm a bit of a hard ass. So if you have a business, you can reach out to our team and potentially set up a call. Outside of that, you guys have a wonderful evening. Let me know in the comments like what other topics. I'm planning out our whole content for June and July for these live streams. If you guys have other ideas for topics, let me know. Like what other questions or what things you would want covered. Always looking for great ideas to add value and support. Hope you guys have a great rest of your night. Bye.